What the spreadsheet does is it gathers stock information from the internet. It then analyzes that information and it returns relevant results. And all you need to do is just enter just a few inputs into the program itself. Now, the stock that I want to analyze is PFE. And I'll click run and have the program gather the information. Now, once the program's done gathering the information and it's finished analyzing the information, it returns some ratios and some different calculations used by investment professionals to make sound decisions on which investment is best for them. The program also takes another step to try and guide you to the best investment based on your investing preference. So I'll show you here two of the results that we get initially. We get the intrinsic value of the stock, and then we also have a score. Now, the intrinsic value of the stock is just the spreadsheet's way of saying this is what the spreadsheet calculated the stock price should be. So if it's more than the actual price, then you can make a good bet that the actual price of the stock should be a bit higher. The score, on the other hand, the score looks at a different set of ratios to determine whether this stock is likely to have high returns in the future, or it's more likely to just be low risk in the future. And sometimes it may be both. The score ranges from 0 to 100. 100 meaning it has high returns with low risk. Now, you can set your preference on whether you prefer low risk or high returns. So if you prefer high returns by 100%, then the spreadsheet will only look at the ratios that are high return ratios. As opposed to if you look at only low risk, it will only look at ratios that determine whether the stock is low risk. So with a low risk score at 29, we can safely assume that this stock is probably a little risky. But with a high return score of 78, score does pretty decently with returns. So if you're a high return investor, this stock will look favorable to you. Now, to navigate through the spreadsheet, it's really simple. You just use the navigation bar at the side, and there's a navigation bar at the top. The one at the side takes you around the home page. So you can see all the ratios all gathered together, all of the influences to the stock itself, to the score, and just have a quick summary on how the stock performs in a little bit more detail than the score the intrinsic value provides. One unique feature of this program also is it gathers the news for you. And you can set keywords that tells the program, look in the news and find these keywords. And these keywords can be triggers onto whether the stock in the future is going to move in a positive direction or a negative direction. And you can click on the news to go to the website where the news is gathered, which is Reuters.com. Besides the home page, you can go through and look at all the details inside of the workbook by clicking on the tabs at the top. And you can just see all of the different statements. There's some more ratios, some analyst opinions, and then there's the calculations. Now this spreadsheet calculates the intrinsic value in three ways. The discounted cash flow method, it does it twice, and then it also has the Graham valuation method. And depending on which information is available at the time, the program automatically picks which intrinsic value you'll get to see. Things like the weighted average cost of capital is also calculated in the spreadsheet. And then you have the different scores to determine risk for the stock. So you can get a lot of detail. But the program is that simple and that easy to use. So thanks for watching. I hope you enjoy.